Hey everyone, welcome back to the Noob Selling Options channel. Today, we've got an absolutely explosive explainer lined up for you. We are breaking down a historic market milestone and the frankly aggressive math driving one of the most talked about valuations on Wall Street right now. We're talking about Micron Technology, a stock that just shattered expectations and basically forced the entire market to rethink how we value memory chips in the age of AI. First off, huge congratulations are in order because on May 26, 2026, Micron officially broke into the incredibly exclusive $1 trillion club. And, this wasn't just a slow, gradual climb over the finish line. This milestone was ignited by an unprecedented Wall Street upgrade that completely reshaped market sentiment around the stock virtually overnight. The way the street values this company has been turned completely upside down, and we're going to peel back the layers to see exactly why. Okay, let's dive into this. Here's our agenda. First, the $1 trillion club. Second, the new memory paradigm. Third, decoding the $1,685 math. Fourth, life after the lock-in. And fifth, the bear case reality.
Starting right off with Section 1, the $1 trillion club.
It's really crucial to understand just how elite this tier of the market truly is. Out of the entire U.S. market, there are only 12 companies that have achieved a $1 trillion market cap, and 11 of them are sitting right here on the S&P 500. You've got the dominant big three up top, NVIDIA, Alphabet, and Apple. But look at the semiconductor presence. The massive wave of AI infrastructure spending has literally concentrated immense wealth right into the supply chain. Broadcom is sitting comfortably here, and now Micron officially joins this tech-heavy elite roster.
So how exactly did they cross that finish line? Well, it was a staggering 18% single-session surge. Shares traded up into the 886 to 891 range. And when you multiply that by their roughly 1.13 billion outstanding shares, that gave them the exact push needed to cross the $1.01 trillion mark. Now you might be wondering, what on earth causes an 18% spike in a single day for a company of this massive size?
That brings us to Section 2, the new memory paradigm. Historically, memory chip makers like Micron traded at heavily discounted multiples. The old view was that DRAM and NAND were notoriously cyclical. It was essentially a Wild West commodity market. But the new reality? Hyperscalers like Microsoft, Google, and Amazon are locking in up to 60 to 70% of industry server DDR5 volumes on 3 to 5 year contracts. These long-term agreements mean guaranteed volume commitments and partially fixed pricing. It's a total game changer. Because advanced high-bandwidth memory is the major bottleneck in the AI supply chain right now, and manufacturing is facing severe global constraints, Micron suddenly holds incredible pricing power. Their HBM capacity is effectively sold out well into 2027. This completely alters their earnings profile, paving the way for an expected $400 billion in free cash flow over the next few years. So we know the narrative changed, but how did the valuation jump so high? Let's get into Section 3, decoding the $1,625 math. Now, what's really interesting here is taking a close look at the UBS earnings base matrix. Analyst Timothy Arcuri more than tripled his price target, but notice how he did it. He didn't just use the peak projected earnings of $167 from calendar year 2028. Instead, he anchored his valuation model directly to the calendar year 2029 downcycle floor of $117. By using the lowest projected earnings over the next 3 years, he basically built in a massive margin of safety. So let's walk through this step-by-step to demystify the exact math. Step 1, you anchor to that 2029 downcycle earnings floor of $117. Step 2, apply a 15x next 12 months price to earnings multiple to that baseline. Boom, that gives you a future valuation of $1,755. Finally, step 3, because price targets are modeled for the next 12 months, you discount that $1,755 future valuation back by roughly 7 to 8%. And that is exactly what brings you to today's fair value target of $1,625. The entire thesis really hinges on this one powerful quote from Arcuri. There is no reason why Mu should trade a whole lot differently than NVDA in terms of PE. UBS is arguing that a 15x multiple is the new normal. Historically, remember, Micron would be punished with an 8 or 10x multiple. But because raw compute simply cannot scale without a matching footprint of ultra-fast AI memory, Wall Street is now pricing Micron like an AI-native infrastructure utility, rather than just a cyclical commodity maker. But what happens next? Section 4, life after the lock-in. Let's move forward and see how this builds. Tracking the timeline into 2027 and 2028, we have peak execution and contract stability. But 2029 is the post-LTA transition, where UBS explicitly models a moderate downcycle. Now, the expiration of these contracts isn't a cliff edge where pricing just crashes to zero. The contracts shift into hybrid floating tiers, elevating the structural floor so earnings stay comfortably above that $100 mark. That completely avoids the catastrophic crashes we've seen in past traditional cycles. However, the true test of this premium depends entirely on the renegotiation power dynamic. If advanced nodes remain severely supply-constrained, Micron holds the leverage to renew contracts at high baseline prices. But if Samsung, SK hynix, and Micron all aggressively overbuild capacity over the next few years, the hyperscalers will hold the leverage. They'll force Micron to compete on lower, floating spot market prices. We've talked a lot about the euphoric bull math, so we need to symmetrically ground this explainer. Which brings us to Section 5, the bear case reality. If the aggressive structural shift narrative falls apart, it is a devastating double whammy for the stock. If AI demand softens, that resilient earnings floor of $117 collapses straight back to base DRAM levels of $35 to $45. Simultaneously, the market strips away that premium 15x multiple and reverts right back to the historical cyclical penalty of 8 to 10x. The result? You're looking at an implied stock price between $320 and $400. A target of $320 to $400 represents a massive 55 to 65% drop from its newly minted trillion-dollar valuation. It even falls below the legacy consensus targets. Look, to be completely upfront with all of you watching, recognizing this severe downside risk, I will not buy Micron at this current price. I would much rather miss the boat entirely on this rally than FOMO in right at the absolute peak of a cycle. If you are tracking this stock, there are two specific operational red flags you absolutely must monitor. First, the CapEx to revenue ratio. Micron is guiding for $25 billion plus in annual spending. If demand slows, the fixed depreciation costs alone will instantly destroy their gross margins. Second, keep a close eye on HBM4 and HBM5 transition yields. If they hit technical roadblocks, customers will simply shift over to SK hynix or Samsung, turning tight supply into a brutal market share loss. So, I want to leave you with this final provocative thought. We're seeing valuations built on unprecedented multi-year contracts and projected supply constraints. But has AI truly, permanently rewritten the rules of the memory industry, transforming these companies into structural utilities? Or are we simply staring at the absolute trillion-dollar peak of just another massive commodity cycle? I would love to hear your take on the Micron math down in the comments. Let me know what you think. Thank you so much for watching this explainer. If you found this breakdown valuable and want more structured deep dive content just like this, please hit that like button and make sure you subscribe to the Noob Selling Options channel. We'll catch you in the next one.